Welcome to this deep dive into global market trends. You shared with us Bill Cara's Global Markets Week in Review, Issue 1 for January 12th, 2025. So let's distill the key insights from this pretty dense report and really try to focus in on what matters most to you.
Yeah, it's a treasure trove of information for sure. I think you'd be particularly interested in this whole market reversal that's happening right now.
Market reversal, I'm all ears.
But bond yields are soaring while stock prices are falling,
Okay.
which is pretty unusual.
So it's kind of like the financial world's doing a headstand or something.
Yeah, exactly.
Now, isn't the conventional wisdom that when the Fed cuts rates, bond yields go down?
You would think so, right?
Yeah.
But this time it's different. The 10-year Treasury yield has actually climbed 120 basis points since the Fed started cutting rates last September.
120 basis points.
Yeah, to put that in perspective, 100 basis points equals 1%.
Oh, wow.
So
That's quite a jump.
yeah, it's a significant increase. And what about the stock market?
So the S&P 500 was hitting all-time highs just recently, and now it's retreating.
Oh,
Almost like investors are getting cold feet.
so bond yields are up, stocks are down. What's driving all this?
Well, the Fed is being pretty cautious about future rate cuts,
Mm-hmm.
which is adding to the uncertainty. You know, they're really kind of carefully watching how things play out.
Yeah, it's like they're trying to walk a tightrope. You
Yeah,
know?
right.
On the one hand, they want to stimulate the economy, but on the other hand, they don't want to fuel inflation.
Exactly.
So it's a tough.
It's a tough balancing act. And speaking of the economy, the U.S. economy is showing surprising strength,
Okay.
despite all this market jitteriness.
Mm-hmm.
So the Fed actually increased its GDP growth forecast to 2.5% for 2024.
Wow.
And this unexpected resilience means fewer rate cuts than many anticipated.
So we've got a nervous market, but a strong economy. That's
Yeah.
a little bit of a head scratcher.
It is a fascinating contradiction. And within this landscape,
We see the continued dominance of those faithful 8 tech giants.
okay,
Amazon, Apple, Microsoft, Alphabet, Meta, Tesla, NVIDIA, and Netflix.
those guys, they just keep getting bigger, don't they?
They do indeed. They accounted for over 50% of the S&P 500's return in 2024
Wow.
and a whopping 34% of its market value.
Okay, so more than a third.
Yeah, and that level of concentration has significant implications for the broader market.
What kind of implications are we talking about here?
Well, for one, it creates this two-tiered market where these giants are almost unstoppable.
Yeah.
While other companies struggle to keep up,
Right.
it raises questions about competition and long-term market stability.
Okay.
And for investors like yourself, it's crucial to consider if your portfolio is overly reliant on these tech giants.
Okay.
Diversifying into other sectors
Right.
could help balance your risk.
That's a good point. I'll definitely keep that in mind. Now, what about specific industries? The report mentions the chemical industry as kind of a bellwether for the U.S. economy.
Yeah, the chemical industry is often seen as a leading indicator of broader economic health.
Okay.
Moderate growth is projected with global chemical production expected to rise by 3.5% in 2025.
That sounds promising.
It is. But the industry is also facing challenges.
Okay.
They're grappling with demand fluctuations and rising costs, which you can see reflected in the U.S. Producer Price Index.
So even the bellwether industries are feeling the heat.
They are.
Now what's happening with central banks around the world?
Ah, yes.
Are they all on the same page?
That's where things get really interesting.
Okay.
We're seeing some fascinating divergence in monetary policies.
So not all on the same page.
Not exactly.
Yep.
The Fed is sticking to its plan for 2 rate cuts in 2025.
Okay.
But they're also very closely watching the potential impact of President Trump's policies,
Okay.
particularly tariffs and tax cuts.
What about the European Central Bank? What's their approach?
The ECB is taking a more aggressive stance with rate cuts.
Okay.
They're aiming for a deposit rate close to 2%, or even 1.5%.
So the Fed is playing it cautious while the ECB is being more aggressive.
That's a good way to put it.
That's quite a contrast.
Yes, and this difference in policy is creating volatility in currency markets,
Right.
adding another layer of complexity for investors to navigate.
Speaking of global shifts, the report mentions a power dynamic at play. It seems like the U.S.-centric old world order is losing its grip with economies like China taking center stage.
That's right. There's a definite shift in global financial power happening.
Okay.
And what's particularly interesting is the rise of the Chinese yuan as a potential rival to the U.S. dollar.
Okay.
This shift, coupled with the U.S.'s growing debt, contributes to a more unpredictable Fed and increased market volatility.
So the U.S. is still a major player, but it's not the only game in town anymore.
Exactly. The global landscape is becoming increasingly multipolar.
Now let's unpack what the Fed is actually doing to manage this complex situation. The report talks about quantitative easing, or QE.
QE. Yes.
Can you remind me what that is again?
Of course, quantitative easing was designed to boost the economy by injecting money into the system.
Okay.
Think of it like pumping air into a flat tire.
Okay.
It did help to prop up equity prices.
Right.
But now, as interest rates rise, there's concern about a potential market crash.
Okay.
It's a very delicate balancing act.
It sounds like it. So what's the current situation with interest rates?
Well, we're in a very unusual situation where the Fed is lowering rates,
Okay.
but Treasury yields are rising.
So it's like pushing on the gas and the brake at the same time.
That's a great analogy.
Kind of creates tension in the system.
Absolutely. And then there's this, another factor that might surprise you.
Okay.
The power of the New York Fed.
The New York Fed, how so?
Well, the president of the New York Fed actually has more influence over Fed policy execution than the Fed chair.
Really?
Yeah, the Fed chair primarily acts as a spokesperson.
Okay.
The New York Fed is responsible for open market operations, or FOMOs.
Oh, okay.
Essentially, they're the ones who manipulate the money supply and interest rates on a day-to-day basis.
So the New York Fed is the one pulling the levers behind the scenes.
Exactly. They're the ones making the gears turn, so to speak.
And another crucial aspect we need to discuss is this issue of illiquidity,
Right.
which the report highlights as a major concern.
Yes.
What does that mean exactly?
Illiquidity is basically a situation where there aren't enough buyers and sellers in the market.
Okay.
This makes it difficult to trade assets at a fair price. Think of it like trying to sell a rare antique in a small town.
Okay.
You might not find many interested buyers, and you might have to lower your price significantly to make a sale.
That makes sense.
Yeah.
So why is illiquidity a concern right now?
Well, the report points to the termination of EUD-USD futures contracts as a contributing factor.
Okay.
These contracts allowed investors to hedge against currency fluctuations between the euro and the US dollar.
Okay.
Without them, the market is less liquid.
So it's kind of like less cushion.
Right, which can amplify price swings.
So illiquidity can make things more volatile.
Exactly. And the scary part is that illiquidity can become a self-fulfilling prophecy.
How so?
As it gets harder to get there, trade rates can rise even faster, potentially leading to defaults.
Oh.
Several countries like Turkey, Argentina, and Sri Lanka are already walking a tightrope
Right.
due to their USD-denominated debt burdens.
Okay, so that's a little precarious.
It is.
And what about the global bond market? Is that stable?
That's another area of concern. Bond yields are surging in Germany, the UK, and the US.
Okay.
And here's a bombshell. China has suspended its bond buying program.
Whoa, that's big news. What does that signal?
It's potentially a major shift in global financial dynamics.
Yeah.
You know, China's been a major buyer of U.S. debt for years,
Yeah.
helping to keep interest rates low.
All right.
This move suggests they might be changing their strategy.
Wow, it feels like everything's in flux.
It does a bit, doesn't it?
So where do we go from here?
Well, before we dive into other key trends and insights, what stands out to you so far? What's piqued your curiosity?
Honestly, I'm a bit overwhelmed by all this information.
Right.
It's a lot to digest. But I'm particularly curious about the implications of this market reversal and the rise of China as a global power.
Okay.
How will these trends affect my personal investments?
Those are excellent questions, and we'll definitely explore them further.
Okay.
We'll pick up the conversation right here in the next part of our deep dive.
Sounds good.
Okay.
So we've covered a lot of ground in terms of like the overall economic landscape. But the report also dives into some specific sectors that are experiencing rapid change and disruption. One that really caught my eye is the world of artificial intelligence and robotics.
Yeah, that's a hotbed of innovation right now, for sure. We're seeing AI and robotics converging in ways that were once considered science fiction. You know, systems are being created that can interact with the physical world, learn from their experiences, adapt in real time.
It's mind-boggling to think about the possibilities, but also a little bit intimidating. What are some of the key advancements highlighted in the report?
Well, one fascinating area is the development of physical intelligence. This allows machines to not only process information, but also understand and navigate dynamic environments. For example, MIT has been developing liquid neural networks, which allow robots to adapt to changing conditions on the fly.
Liquid neural networks. That sounds incredibly complex.
It is. But the basic idea is that these networks mimic the flexibility and adaptability of the human brain. They can process information from multiple sources, simultaneously make decisions based on incomplete data, and even learn from their mistakes.
So these robots are becoming more and more like us.
In some ways, yes. And it's not just about intelligence. Robots are also getting superhuman senses. Innovations in sensory technology are giving them incredible vision and environmental awareness.
I'm picturing robots with laser eyes.
Well, not quite laser eyes, but there are technologies like panoradar that use radio waves to create detailed 3D views of their surroundings. It's like giving robots X-ray vision.
So they can see through walls. What are the implications of that?
The potential applications are vast, particularly in industries that involve manual labor or repetitive tasks. Imagine robots that can inspect infrastructure for damage work in hazardous environments, or even perform surgery with incredible precision.
But it also raises concerns about privacy and security, right? If robots can see through walls, where does that leave our personal privacy?
That's a valid concern, and it's one that policymakers and ethicists are grappling with right now. As with any powerful technology, there's always the potential for misuse.
It's like opening Pandora's box. We have to be very careful about how we develop and deploy these technologies.
Absolutely. The key is to strike a balance between innovation and responsibility. We need to harness the power of these advancements while also putting safeguards in place to prevent unintended consequences.
Speaking of potential disruptions, let's shift gears to the world of cryptocurrencies. It's a market that's known for its volatility and hype. What's the report's take on the current state of crypto?
The report acknowledges the extreme price swings we've seen in cryptocurrencies like Bitcoin and Ethereum. It emphasizes that these are high-risk assets driven more by market sentiment and momentum than by underlying fundamentals.
So it's a bit of a gamble.
It can be, yes. There's this constant debate raging about whether cryptocurrencies are a legitimate form of currency or just a speculative bubble. The truth is, it's probably a bit of both. Some people believe that cryptocurrencies will revolutionize the financial system, while others see them as a fad that will eventually fade away.
It's a wild west out there. The report also mentions regulatory challenges facing cryptocurrencies.
Yes, governments around the world are struggling to figure out how to classify and regulate these digital assets. They're concerned about tax evasion, money laundering, and the potential for systemic risk if the crypto market were to collapse.
So more regulation is on the horizon.
It seems inevitable. And while some crypto enthusiasts might see regulation as a threat, it could actually benefit the market in the long run. Increased regulation could bring more stability and legitimacy to the crypto world, attracting institutional investors and potentially reducing volatility.
It's fascinating to see how the space is evolving. Now let's move on to another sector that's experiencing a boom: biotechnology. It seems like there are always new breakthroughs happening in this field.
The biotech sector is incredibly dynamic right now, with advancements in gene editing, synthetic biology, and personalized medicine. The report highlights companies that are developing groundbreaking new therapies and treatments.
It's almost like science fiction becoming reality. What are some of the key areas of focus in biotech?
Gene editing is one area that holds immense promise. Technologies like CRISPR-Cas9 allow scientists to precisely alter DNA sequences, potentially curing genetic diseases or enhancing certain traits.
That's incredible. Are there any risks or ethical concerns associated with gene editing?
There are definitely ethical considerations that need to be addressed.
Yeah.
We need to be careful about unintended consequences and ensure that these technologies are used responsibly.
It's a powerful tool that needs to be handled with care. What about synthetic biology? That sounds futuristic.
Synthetic biology is about engineering biological systems to perform specific tasks. It's like taking the principles of engineering and applying them to the building blocks of life.
So we could essentially create new life forms.
In a way, yes. Synthetic biology has the potential to create new organisms that can produce biofuels, break down pollutants, or even manufacture medicines.
Wow, that's mind-blowing. And what about personalized medicine? How is that changing the healthcare landscape?
Personalized medicine is about tailoring treatments to an individual's unique genetic makeup. This could revolutionize healthcare by making treatments more effective and reducing side effects.
It sounds like the future of medicine is being shaped right before our eyes. Now let's zoom out and look at the global market outlook. The report provides some region-specific insights. What are some of the key takeaways?
Well, in Canada, oil and metal miners are performing well, but there are concerns about potential trade policies from the U.S. Latin America presents a mixed bag. with some countries like Brazil and Mexico offering opportunities, while others face economic and political challenges.
And what about Europe? How are they faring?
Europe is also a mixed bag. Some markets like Germany and the Netherlands are showing strong performance, but overall risks are elevated due to the ongoing conflict between Russia and Ukraine.
And what about Asia, the world's fastest growing region?
Asia offers a diverse range of opportunities. China's economic slowdown is a concern, but its long-term growth potential remains immense. India is a rising star with a young population and a rapidly developing economy. And Japan, despite its aging population, is still a technological powerhouse.
It sounds like a global buffet of investment opportunities, each with its own risks and rewards.
That's a great way to put it. But just like at a buffet, it's important to choose wisely and not overload your plate.
That's good advice. Now, before we wrap up this part of our deep dive, I want to go back to something you mentioned earlier, bellwether stocks. Can you explain that concept a bit more?
Sure, bellwether stocks are leading companies in their respective sectors or industries. They're often seen as barometers for the overall health of their markets. Think of companies like Apple, JP Morgan, Chase, Chevron, and Walmart.
So if I'm trying to understand how a particular sector is doing, I should pay attention to how its bellwether stocks are performing.
Exactly. They can provide valuable insights into market trends and investor sentiment. For example, if Apple stock is doing well, it could be a sign that the tech sector is healthy. Conversely, if Walmart stock is struggling, it could be a sign that consumer spending is weakening.
That makes sense. It's like looking at a few key trees to get a sense of the health of the entire forest.
Precisely. Now, before we move on to the final part of our deep dive, I'm curious to know what's resonating with you most so far. What's surprising you? What connections are you making to your own personal financial goals?
I'm finding it all fascinating, to be honest. I'm particularly struck by the rapid pace of change in fields like AI, robotics, and biotech. It's both exciting and a little bit daunting. I'm also thinking about how I can apply these insights to my own investment portfolio.
Those are great points. We'll continue this exploration in the final part of our deep dive. We'll talk about some specific strategies for navigating this complex and ever-changing global market landscape.
So we've covered a lot of ground in this deep dive. Market reversals, central bank policies, the rise of China, and these breakthroughs in AI, robotics, and biotech. It's clear that we're living in a time of unprecedented change and interconnectedness. So how do we make sense of it all? What are some guiding principles for navigating this complex landscape?
Well, that's the key question, isn't it? And amidst all this complexity, it's important to remember some timeless principles.
Okay.
One of the most fundamental is diversification.
Diversification. Don't put all your eggs in one basket. I've heard that before. But why is it so crucial in the current market environment?
Well, as we've seen, different regions and sectors are performing very differently.
Right.
Some are booming while others are struggling. By spreading your investments across a range of asset classes, stocks, bonds, real estate commodities, and so on, you can potentially reduce your risk and smooth out your returns over time.
That makes sense. It's like a safety net. If one investment goes south, others can potentially cushion the blow.
Exactly. And diversification isn't just about different types of assets, it's also about geographic diversification. Investing in different countries and regions can help you tap into growth opportunities around the world and reduce your exposure to any single economy.
So I shouldn't just focus on U.S. markets, even though the U.S. economy is relatively strong right now.
That's right. While the U.S. is still a major player, it's important to remember that the global landscape is changing. Emerging markets like those in Asia and Latin America are presenting new opportunities for growth.
It's all about balancing risk and reward. What other principles are essential for navigating today's markets?
Another key principle is staying informed. The financial world is constantly evolving, and what worked yesterday might not work tomorrow.
It's like being a lifelong student, always learning and adapting.
Exactly. Staying up to date on market trends, economic data, and geopolitical developments is crucial for making informed investment decisions.
So reading reports like Bill Cara's Global Markets Week in Review is a good start.
Absolutely. It provides a great overview of key trends and insights. And of course, there are many other resources available, financial news websites, podcasts, books, and even just talking to other investors.
It's about being proactive and seeking out information. I'm also curious about your thoughts on long-term versus short-term investment strategies. It seems like the market is so volatile these days that it's hard to know what to do.
That's a common concern, and it brings us to another timeless principle. Investing is a marathon, not a sprint. It's easy to get caught up in the short-term noise and hype. especially with the 24/7 news cycle, constantly bombarding us with information. But it's crucial to focus on your long-term goals and stay disciplined with your investment strategy.
So don't panic and sell everything when the market takes a dip.
Exactly. Market fluctuations are normal and they're to be expected. The key is to have a plan and stick to it even when things get bumpy.
That's reassuring. So in this deep dive, we've explored a wide range of topics, from the surprising strength of the U.S. economy to the rise of China as a global power. And we've delved into cutting-edge innovations in fields like AI, robotics, and biotech. It's a lot to take in, but I feel like I have a much better understanding of the forces shaping the global market.
That's great to hear. And as we wrap up this deep dive, I want to leave you with a few questions to ponder.
Okay.
What surprised you most in this exploration? How do these global trends connect to your personal financial goals? And what further questions do you have, and where you go to find those answers?
Those are great questions, and I'll definitely be reflecting on them. Thank you for joining us on this journey of discovery. It's been an enlightening and engaging conversation. Remember, knowledge is power, and the more you know, the better equipped you'll be to navigate the ever-changing world of global markets.
I agree. Until next time, keep learning, keep exploring, and keep that curiosity burning bright.